Can you break it down for us in simple terms, like how and what is the perfect timing for going for the fundraising and what it takes for a company to go public? What's that?
I set myself a rule, probably never invest my own time or money into an idea until I've got at least 3 other people's commitments. If I can't sell those 3 places, then I've got a fundamental problem with the thing, so I wouldn't move forward.
I want to know a little bit about the failures.
We did 14 acquisitions. We grew the market cap 900%. Then we got attacked by white-collar criminals, basically, in the US. A guy illegally shorted our stock and dumped a huge amount of shares, and we basically wiped out $250 million in market cap.
You've seen success in your life. You have made companies. For you, how do you define success? And what would be the message that you would like to give to the people who are just thinking that making that 10 million, 1 billion would solve all the problems for them?
Find the torture you're comfortable with. So getting up on stage and trying to make people laugh is torture, but he's comfortable in that space. One day is going to be the worst day in the world. The next day, a client phones you up, you're like, oh, it's the best thing ever. And so you kind of need to get comfortable with that.
Hello, everyone. Welcome to another engaging episode of The Cost of It. And this time we're in the beautiful Singapore. And today I've got Callum Laing with me. Hello, Callum. Welcome to the show. It's a pleasure to have you.
Hey, Wajeeh. I've been looking forward to this. It's exciting.
Perfect. So my fundamental job is to work with startups and helping the tech founders build their products and help them, achieve to the first, go to market when they have an idea and they have to execute and launch it. But after launching it, of course, to scale it, there's a lot that they have to do. So Callum is a specialized entrepreneur. He's a very seasoned investor as well. So we'll talk about the strategies, the startups he has found. So this is all about it today. So Callum, first of all, how old are you?
I had to think about that. I've just turned 50.
50. So I'll take you back to the old days when you started your career, because the particular reason and purpose of this show is to highlight the sacrifices, the pains, and the cost that you have to pay in order to be to the stage. So tell us about the background. Tell us about your early days a little bit. Yeah.
Oh, it was all easy. All came to me straight away. No problems at all. No, look, I started my first entrepreneurial journey as a kid, basically just trying to hustle to make money. So I had a little ice cream business selling homemade ice cream to pubs and restaurants when I was in my teenage years. Went through university, did business and computing. And at the time, the whole internet, the Dotcom boom was
revolution
happening.
Came in.
Yeah. So I dropped out and went and worked for an internet company, one of the biggest ISPs, internet service providers at the time. Super exciting, like just the great experience for a young kid. And I kept getting promoted, ended up in Amsterdam running the European Operations Center. And an interesting thing happened was that everything was growing so fast and headhunters were constantly on the phone to me and my team. And I couldn't work out, like I was just an engineer, I couldn't work out why they were spending so much time and effort trying to woo me into these other jobs. So I did a bit of digging and I found out like how much money recruiters made every time they placed one of my team somewhere else. And so I thought, well, that seems like a good game. So I set up my own recruitment company. I knew everybody in the industry, and that was sort of my first entrepreneurial or grown-up entrepreneurial business. And it went very well, which was proof that if you're in the right place at the right time, it can be relatively smoothly. We made quite a lot of money quite quickly. And of course, being in my early 20s, I thought that was all down to my unique talent and hard work. And then the bubble burst. And I fell rather hard. Suddenly, companies weren't recruiting, they were laying off. And ended up basically selling that business to a partner for next to nothing. But by then I was kind of broken. I couldn't go back into the workforce. And so one of the things that I had actually spotted when I was looking at the recruitment business, I was looking at sort of the big macro trends, and obviously tech was the one that I was betting on. But another one that had kind of stood out to me was that there was the largest transfer of wealth in history was going from Western economies to Eastern economies. So this is late 90s. That seemed really interesting to me. As a young entrepreneur, I thought, well, hang on, why am I on the giving end of this and not the receiving end of this? And so myself and my then girlfriend, now wife, decided that we would move out to Asia. Didn't really know much about it, but she ended up getting a wonderful job in Bangkok in Thailand. She's a primary school teacher. And I was like, yeah, I'm sure I can set something up there, no problem. And arrived in Thailand knowing nobody and really no idea what I was going to do. Like I was still used to having headhunters calling me because my skills were quite in demand in Europe and the US, but in Asia, nobody cared.
Pretty new market, yeah.
And so that was a real shock. And it made me, I think the biggest learning I got from it was how dependent I had been on my network. Not just for opportunities, but also just phoning somebody up and asking them a question. And now I was on a completely different time zone. And it was difficult to kind of get information. And so on the one hand, that was a very difficult challenge to go through. On the other hand, it actually became quite freeing because nobody in Thailand had any expectations about what I should be doing or what I could be doing. And like a lot of immigrants, you are on the outside. And so you have to innovate. You're not allowed the traditional path. And so I had to kind of scrabble around. And it was actually a very, very good education and learning space to learn entrepreneurship because the one of many advantages Thailand has is it was very cheap at the time. It's still relatively cheap. But so you could make a lot of mistakes quite cheaply. Whereas in the West, it's a lot more expensive. And so I made a lot of mistakes and I made a huge number of mistakes, but it was great learning. And over that sort of 9 years, I got better and better at entrepreneurship and learned a lot of lessons and started buying companies and kind of evolved into what I've now become.
So you started like in your teenage and pretty much, decades of trying different things. So you've been into different places. You started from one place and then you went on Thailand. And now, like, how did you end up being in Singapore? Tell us a little bit about that, how this regional, like cultural or the change in location helped you in, scaling your businesses overall.
One of the advantages, as I mentioned about Thailand, was that...
And you've been in Dubai too.
And I have lots of business interests in Dubai. So one of the advantages of Thailand, as I've mentioned, was it was cheap, it was quite easy, but there was also very much what I call a foreigner glass ceiling. You could do all right, but you're never going to get above that. And well, certainly I didn't have the talent and haven't seen many people do that. So I was ambitious, I was driven, and started to put together more intelligent business opportunities. But I realized that I needed to be surrounded by other people like me. I needed to be surrounded by people that were challenging me. And I needed to be surrounded with where people were willing to invest. And Singapore, and I loved Asia. There's so much going on here. There's so much energy. So I didn't want to leave Asia. And Singapore was really a natural next step. Also, we'd had a kid at that point. Another one. And so Singapore was a little bit more mature, probably a little bit safer than jumping on the back of motorbikes without helmets and the things that we used to do. And so, moved to Singapore with a business. It was kind of around the days of the Groupon craze. And you may remember there's a lot of clones of those going. And what I had built was an employee fitness company. We basically went to all of those little niche fitness places, got a free sample, packaged it together and gave it to companies or sold it to companies to give to their staff so they could go and try out a whole bunch of different things. And that was going quite well. We were doing the very Silicon Valley approach of like just raise money, scale as fast as you can, figure out the economics of it later. And so kind of went from a 1 million valuation to a 10 million valuation, expanded to 13 countries, I think 24 cities or something, and then the economy collapsed. So basically, Facebook launched and dropped like a cliff. Groupon went public and fell off a cliff, and suddenly nobody was putting money into those businesses. And all the advice I'd been getting up to that was, don't worry about revenue, don't worry about, just scale. There'll always be people willing to back you. Turns out there weren't. So I learned another hard lesson with that one. But by then I was in Singapore and I'd started to build up my network here. And it's a great, I think one of the biggest decisions people make without thinking about is where they live. And I think it's the biggest force multiplier to what goes on. Most people still to this day die within 10 miles of where they were born. And yet it's insane the amount of opportunities around the world, but you need to be where it's happening. Dubai is an amazing example. And what's interesting is like most people come from the West to Singapore and they go, oh, there's so much going on here. Like there's just the energy, the drive, like everyone's entrepreneurial. And then you go to Dubai and it makes this place look slow. And so I think putting yourself around the right people is just such a fundamental hack to success.
Yeah, no, that's true. And we'll touch base on your entrepreneurship and how you scale the businesses. But tell us about most of the founders, they are always looking for the easy routes when they go for the startups, they want to build something. So I want to know a little bit about the failures that you went through and how you overcome those challenges and how you got yourself back to the track. Tell us a little bit about those challenges.
I don't think we've got long enough to go into all of them, but
just one of them, maybe the most craziest of them. Yeah.
I've lurched from one failure to another failure, and you pick up lessons along the way. So obviously when the Dotcom bubble burst, that was a real kind of big shock for me. That was my first big failure and it felt very public. This is one of the things you learn is that it feels very public to you. Nobody cares. Everybody else is so busy doing their own thing. Like it just disappears. The next one I did was still in Thailand. I'd built up business, very successful. I had a sports events company. I had a bar and nightclub. I had a couple of other bits and pieces. And then the global financial crisis happened. And two of my biggest clients defaulted, each owing me $1 million. And it just killed me. I ended up laying off 38 of 42 staff. And it was just brutal. And I kind of thought, well, I'll never recover from this. This is so bad. And then you do. Like you just got to keep going. And then I remember the first time we took a company public, which was about 10 years ago. We launched, it was hugely successful. We did 14 acquisitions. We grew the market cap 900%. And then we got attacked by white collar criminals, basically in the US. A guy illegally shorted our stock and dumped a huge amount of shares. And we basically wiped out $250 million in market cap. And I was destroyed. Like for 3 months, like I didn't sleep. It was just, you got shareholders threatening you and it was terrifying. And you think, oh, I'm never going to recover from this. It makes my other failures look like, just a hiccup. What I had learned from those others is that at the time it feels horrendous, but the sun keeps rising.
And typically, it technically makes you more stronger to be more resilient. Yeah,
it does. And I think with time, you get a lot more perspective. When it's the first time something's gone wrong, you're like, everything's gone wrong. And as you go through it, and what's interesting now is I probably have had failures in the last 6 months that were as big as my early failures. I don't even register them. They're just like, that product didn't work. Let's move on. So it's kind of part of the journey. It's, like when with bodybuilding, your muscles have to tear before they get bigger again. And I think that's kind of...
Everything comes at a cost. So
exactly.
That's true. So you've worked with a lot of entrepreneurs, a lot of startups, and then now you're actively investing as well. So you're on the both side of the table. So I'll just touch base on this topic because before the AI revolution, when AI was not there, technology part was quite difficult to achieve. People used to, spend months and months to build a product, right? But now I think the norms have changed. Now, if you just have to identify a problem and solving the problem, making a product, it's not very challenging these days. So But again, when you solve a problem, you launch a product. Most of the founders are innovators, right? They're looking to solve a problem. They're not marketing specialists. They are not people experienced in how to scale, how to raise funds. So how do you look at the startups in 2025 and moving ahead? Like, what's your thought process on that?
Yeah, so look, I love startups, but I very deliberately don't invest anywhere near startups. So my core business is taking companies public. We only work with companies that are doing $1 million of EBIT or above, and typically they're 10, 15 years old. So old economy, boring. That's my day job. We've taken over 100 companies public. In my personal sort of on the side, I love the startup space, and this AI revolution is, I am like a kid in a candy store. Like, this is just, I wake up just buzzing to see what I can do. So you're absolutely right. It has completely condensed the time to go from ideation to prototype and going on. But again, you're absolutely right. There's some value in solving a problem. But generally, as humans, we're pretty good at seeing problems and coming up with solutions. There's not a lot of value in it. And so really, you look at some of the best entrepreneurs today, they started with distribution first. So if you look at Ryan Reynolds, built up a massive audience and is a phenomenally successful entrepreneur off the back of that. Mr. Beast built up a huge audience first. Jake Paul, so this new generation realized that you've got to capture attention first. And when you've captured attention, then you figure out how can you solve a problem for the people whose attention I've captured. And that's a much easier way of doing it. Now, interestingly, on the investor side, because I help people to raise capital and I help people to become capital raisers, so they sit in between capital and companies. For a long time, Silicon Valley has been telling us, I criticize Silicon Valley quite heavily because a lot of it just doesn't, a lot of what they say isn't what they do. One of the smart things that came out of the whole valley was this idea of minimal viable products, like just get something to market, test it, and then build from that. What's interesting is that companies have generally followed that advice. So any smart entrepreneur that you see, they no longer spend a year behind closed doors building something. They get something out as quickly as possible and try and see whether it works. But when it comes to raising capital, they forget that idea. So what I mean by that is they'll spend 2 years building a business, then they go out looking for an investor, not knowing whether an investor has any interest. And so it's basically like looking for a needle in a haystack. The smartest people I know that can raise money on tap sit with the investors first. What's the problem that you've got as an investor? Okay, I want high yield. Right, well, I'm not going to show you a startup if you want high yield. I want fast capital growth. I get this. I want education in the AI space. Okay, I'll put this. And what they do is they find deals to match the needs of the investor, which is what, as entrepreneurs, we should be doing. If you want to go out and sell equity in your company, it has to solve a problem for the investor. Most people trying to raise capital have no idea what an investor is looking for. And part of the problem is the word investor is very amorphous. You've got somebody that spends $200 on an NFT as an investor, as is the head of a $7 billion hedge fund. They've got nothing in common, right? And so if you go out going, I need an investor, it's like saying, I need a customer. Well, what kind of customer do you need? So a lot of what I do now, and I put out a lot of free content around this, is helping people understand what investors do and what investors need. And interestingly, I often say that founders should stick a small amount of angel capital into somebody else's business just to feel what it's like to have somebody playing with your money, because it changes the way you think. Yeah.
So I'll pick up that point because I'm a true believer of bootstrapping, right? All the businesses that I've been part of, we have tried to, bootstrap them early so that we get customers, we get to the break-even point. We never thought about external money coming in. And of course, that's great to have some millions of dollars coming into business. But when it comes to fundraising, it's kind of a chicken egg situation, right? As you mentioned that before building the idea, you go to the investors. In some cases, I've seen that when you go to the investors, they say, okay, first build the idea, check it out. How's the users' feedback? How many customers you get? Just do the early validation and then come to us, right? Now, in the other side, if let's say you spend 6-8 months, 1 year to build the product and then go to investor, they find out, okay, this is something that is not solving the actual problem. So Bernard, so I've seen this kind of a little bit very complicated to understand. So making it easy for the entrepreneurs, the listeners who are listening to the conversation or building amazing things, being a coach, being someone who's, consulting people on how to raise funds. Can you break it down for us in simple terms, like how and what is the perfect timing for going for the fundraising and what it takes for a company to go public? What's that? So can you just shed some light on that?
It's a broad topic. Okay, look, I think what's happened, and this definitely is a result of Silicon Valley, and I don't think it's a good thing, is that entrepreneurs have got into their mind that you come up with an idea and then you find an investor. And so as an investor, a lot of the questions I get from young entrepreneurs are, how do I raise money? And I'm like, that's the wrong question. So if you think of it as a circle, what you should be doing is you come up with the idea, you talk to the client, or actually probably talk to a team member and see whether you can build a team around it, and then talk to the clients. Find out whether you've got actual traction. And, very simple
By
thing.
clients, you mean customers, right?
Yeah.
Okay.
Yeah. So, and a very simple thing that we always say, and this is a discipline that, because I used to do exactly the same thing. Like I would spend... I would do market research, which was go and talk to my mates in the pub and say, hey, do you think this is a good idea? They were nice. They would always say, yeah, it's a brilliant idea.
It's $1 billion idea.
Yeah,
Let's do
definitely.
it. Yeah.
So I would go and invest all my money, all my time building it. Then I'd go back to them and go, great, I've built it. Do you want it? They go, it's not a good time right now. And so I set myself a rule probably 15, 20 years ago, which is never invest my own time or money into an idea until I've got at least 3 other people's commitments, and I needed a hard commitment from them. And what I mean by that is I would do a 1-pager and I'd say, look, this service is going to be $5,000. The first 3 people that sign up get it for $2,000, but it's not ready yet. So if you put the deposit down, I haven't got it ready within 2 months, I'll give you the money back. If I can't sell it, if I can't sell those 3 places, then I've got a problem. I've got a fundamental problem with the thing. So I wouldn't move forward. Same thing with investment. So you've got to have those conversations. You've got to try and get those traction, build the team, build partnerships, which is a huge piece that is often overlooked because that gives you traction. By the way, once you've got those partnerships, you can add new products. You can you get that traction.
Come up with a workaround, yeah.
Yeah. Interestingly enough, if you've kind of gone around the circle this way, by the time that you're thinking about investors, they're knocking on your door because they see that you've got traction. They see that you've got partnerships. They see that this is something that they want to be a part of. And it's a completely different conversation if they're knocking on your door rather than you knocking on their door.
You can show your terms and all
exactly,
that.
Exactly. And then you kind of go around these circles, and once you can just go around and add new products and everything else. But most people are still stuck in this idea of investor. And it's just frustrating. And I think this idea of what Silicon Valley shows is this, hey, look, Uber did this deck. So if you follow this deck and go and knock on 1,000 doors, and they keep showing us these success stories on her 656th door knock because she got funding. That's ridiculous. There's better ways to spend your time than doing that. Get to understand what investors are looking for. So that would be kind of the first bit. The second bit is around the public markets. Now, the public markets is an interesting one in of itself because when I was growing up, the public markets were very exciting. It was every entrepreneur's dream was to get into the public markets. And when a company went public, it was a big deal. Like it was front page of the news. And in those days, you would phone up your broker and you'd try and get hold of some stock. But if you think about that, like the 70s and 80s, which were kind of the glory days of that, what else were investors investing in? Bonds, real estate, the stock exchange. That was pretty much it. And there wasn't a lot of excitement in any of those 3 at the time. when a company listed, everyone wanted it. It was exciting. And so there was this demand. And what's interesting is the market has shifted completely, and yet the mindset is still the same. So companies still go public today thinking there's this amorphous group of public investors that will leap on and try and buy their stock. But investors today are overwhelmed with options. I mean, the top 7 companies in the world are still growing at like 20, 25% a year. Everything else is competing with that, and they're sitting on 100 billion in dry capital. Every man, woman, and child is raising capital for a project. Like, investors are just inundated with opportunities. So it's very difficult to register. So just going public, nobody cares if you just go public. On the flip of that, which makes the situation even worse, is that for years, the investment banks and everybody else has said, go public, you can cash out. And so going public is seen as an exit. So if you talk to a startup, they will say things like, we're going to go public and exit in 3 years' time. I mean, investors know this is rubbish, but everyone says it, right? You've got to say there's an exit. And so everyone talks about IPO. If you Google IPOs, everything that comes up is IPO as an exit. So this company goes public. The founder finally wants to get some cash. The staff that have been underpaid for years but given these stock options want to get some cash. Angel investors, early investors, the investment banks themselves all want to get some cash. So what happens is these companies go public. There's this vomiting of stock into the market as everyone tries to sell, and a completely indifferent buy side because you're just another company. Something like 70% of IPOs in the last 10 years have gone backwards and not recovered. It's about 50% over the last 30, 40 years. So 50% of public listings are value destructive as opposed to value creative because everyone sells. So we kind of went through this. Like I said, we've taken over 100 companies public. The lesson that we learned was that the stock market is a fantastic tool, but not for raising capital. It's a fantastic tool for credibility, for transparency, and for creating a currency which you can use for acquisitions. You have to solve that supply-demand tension. And there's 2 ways you can do it. One, you can generate huge amounts of hype, which is incredibly expensive to do. It's nearly impossible to do.
That's where most of the people go for ICOs, like in the crypto and the blockchain space.
But same sort of thing. Like, you have to create hype around it. Like, why is there going to be demand for your token? And this is something that some ICOs have done quite well, is you restrict, you constrain the tokens, you can constrain the stock. So we went to market, or we now go to market, and we've got 3 listings this year. Every single listing, every single person involved in the deal is locked up for 5 years.
Okay.
Which means there's very little liquidity.
And commitment, yeah.
But to an investor, okay, well, if you can't sell for 5 years, this is an attractive option for me because I can hold for the next 4 years and then know it's only going to go up because there's no one fighting against me. So it becomes very, very attractive to investors. Investors come in. You can then leak stock into the market when there's more buy side than sell side. And this changes the game completely. Stock markets hate it because they want liquidity. Everyone makes money when there's trading, but trading doesn't serve small caps and micro caps, which is what most companies list at. So again, look, this was a hard-earned, it's taken 10 years for us to kind of learn these lessons. I think if you're an entrepreneur, I know it's overwhelming, like there's so much to learn about being an entrepreneur, but you have to understand where you sit in the investment ecosystem as well, because it is a culture shock. You kind of naturally think capital markets, business, economics, like it's all tied together. Everyone should be speaking the same language. They're not at all. So, for example, us entrepreneurs, we make profit by creating value for others. So I sell something to you, I've created some value, I sell something, I make some money. I reinvest that money into growth in the company.
Yep.
To an investor, that's nuts. Right? You've made some money, let's take the money off the table. Investors, you think like traders, they create value through making profit. Now, it's a subtle, but it's a different distinction. So they want to profit off you. It doesn't matter whether you go up, whether you go down. They want to profit off you because that's how they add value to their investors. Yep. And so you get this fundamental clash of cultures, which is why you see so many entrepreneurs take their company public, tick off the bucket list, ring the bell, greatest day of my life. 6 months later, they're beaten up, they're bruised, they haven't slept. They take the company private again, going, I would never do that again. Wall Street's horrible. Wall Street is horrible, but they're just playing their own game. And you've got to understand, you can't run onto a basketball pitch, think you're playing football and go, well, this is not fair. Everyone's holding the ball. You've got to understand the rules of the game you're playing by.
No, thanks very much for summarizing the entire, 10 years of your exposure in this market. So, and this is where I'll pick up, because most of the entrepreneurs, the founders, they are like innovators, they are builders, right? So they focus on, they think that if I solve the problem, it's going to be, taking me to the skies. And this is one thing that I need to do, right? But when they end up doing that, they realize that they have to now roll the sleeves and wear different hats. Like they have to do marketing, they have to do sales, they have to do admin, they have to do accounts, everything on their own, right? So going for an IPO, this is something that they barely think about. And this is where they just think that raising money and finding investors to, invest in the idea is just the only solution. So if you could break it down a little bit, like what it takes for a company to go for an IPO, what are the qualifying criterias, and what founders, like our audience, let's say, if they want to go public, because most of the companies that I've seen in Pakistan and Dubai, they're very big. They have a history of maintaining themselves for years and years. So how, let's say, to take that direction, what's the starting point, if you could shed some light on that?
My first bit of advice would be don't. Don't.
Okay.
You've got to be very clear about why do you want to go public. In the past, it was about raising capital. Today, there's easier ways to raise capital.
What are those ways?
So you can do bonds. You can go and talk to investors. It's easier to have a conversation. It's easier for me to sit down with you and negotiate a $5 million block sale of my stock than it is to spend a couple of $1 million going through an IPO process. Now, I still take companies public, so why am I advising other people not to? The two reasons that I think it still has some value. One is credibility. The way we do this is we take groups of small companies and we put them into a holdco and take that holdco public and then add more and more small companies in. Small companies face what we call the scale paradox, which is you reach a certain height, it's very difficult to go beyond that. And if you're a traditional hospital, restaurant chain, construction industry, you're not going to get venture capital funding. You're too boring. And you're too small to kind of get access to the banks and that sort of stuff. And so there's something called procurement best practice, which is basically a big company won't give a big contract to a small company. So they'll give that big contract to another big company who'll then break it down and give parts of it to you, but keep all of the profit. And so when you're in a public company, suddenly that procurement thing goes away. Suddenly you can win much, much bigger contracts. Even though you're exactly the same, you just win much bigger contracts because the employee risk isn't there anymore. They can go, well, they're a public company. Yeah, it must be good. So that's credibility is definitely counts. And the second one is acquisitions. I still think if you want to grow by acquisitions, and by the way, most big companies are growing by acquisition. You see these huge growth numbers. Some of it's organic growth, but a lot of it is acquisitions. And one of the most valuable things they have is they don't need to use cash on their balance sheet. They use stocks. And so that would be a reason. If you've got a pipeline of deals you want to do, generate your own currency in this stock and then go and do those deals. If it's just about your ego, if it's just about ringing the bell and trying to raise capital, it's so hard that there are so many rules and regulations, and you are going from being typically a big fish in a small pond as a successful business owner to Wall Street or the city or wherever the market is, where you're fighting people who have been doing this since they were 20 years old, know every trick in the book, will happily smile and shake your hand and then stab you in the back because that's what they need to do to make money for their investors. And you don't know the rules. And the investment banks that are there to protect you, they don't care. They get paid regardless. So yeah, look, it's it's a tough journey, and I think you need to be super, super clear about why you want to do it if you're going to do it. I think there's easier ways to grow the companies.
Great. Now we'll talk about your book, Boardroom Blueprint. We have it here.
My most recent book.
Yeah, your recent book. Can you tell us and our audience a little bit about that? What is it about? Who is it for?
One of the things, when I was a young, dumb, struggling entrepreneur, I remember sitting in an office on my own on a Saturday, just not knowing what to do, and thinking, you know what would be really interesting is if I could get a board seat on a successful company so I could see how you do this. But of course, I didn't know anyone sitting on boards. I didn't really know what a board was. And I didn't have any opportunity. Later on, when we started taking companies public, suddenly I find myself on lots of boards. And now I'm sitting on boards, I'm advising boards. What I discovered was that boards aren't nearly as clever as I thought they were. Like in my mind, they're these sort of omnipresent people that know everything. And I discovered that wasn't always the case. I also got quite frustrated that there are a lot of people on the board. You are supposed to represent all stakeholders for long-term growth. And there's a lot of people on boards that are just in it for themselves. And there's a lot of very talented people that are not on boards because they didn't go to the right schools, they don't know the right people, they don't look the right way. And that really frustrated me. As an entrepreneur, that's like, here's value, here's frustrating thing. There's got to be a way around this. And so I discovered a few Trojan horses that allow somebody without experience to get onto a board seat, because nobody will hire you for a board seat unless you've already got board experience. It's a little bit like when you first start work. No one will hire you until you get work experience. It's like catch-22. So I set up a company 3 years ago called the Veblen Director Program, which was to help executives and entrepreneurs that are outsiders to get their first board seats. And we've helped hundreds and hundreds of people to sit on now probably 1,000 boards around the world. We start them off with creating advisory boards for small businesses. And this is kind of on the entrepreneurial side. So for your listeners, one of the biggest hacks towards success that I can recommend is build an advisory board. As entrepreneurs, we try and do everything ourselves. Put smart people around you. And most entrepreneurs say, well, I can't afford to do that. It doesn't need to cost you money. So one of the things that I learned very early on is that a lot of people are very envious of entrepreneurs. So a lot of career people, employees, like to, or they want to live vicariously through entrepreneurs.
Yeah.
So I could go and find some middle manager at a networking event and say, hey, would you sit on my advisory board? To be honest, I didn't care whether they gave me good advice or not. What I cared about was I could now tell somebody else, like an investor, hey, I've got somebody from Microsoft sitting on my board. Could have been the janitor. For a
adds a lot of credibility.
Huge credibility. And also, if one of those advisors makes one connection to a new client, to a new partner, to an investor, that can completely change the trajectory of your business. And generally, it costs you a coffee once a month. Like that's it. So we train members up on how to go and create those advisory boards, and then how to leverage those. First of all, like we do apprentice boards for public listed companies. So we kind of take the pressure off public companies on, because it's very expensive to hire board members, and it's very costly if you get it wrong. So an apprentice position, basically you work for free for the board of a public company, do all the things that directors hate doing, like the ESG reports and the investor relations reports. That makes you the most valuable person on the board very quickly, and you're still not costing them anything. So you get that experience, you get the contacts, you get on the inside, and then it's really easy for them to make you a director, as opposed to don't ever apply. Like one of our mantras is never apply for a board seat, create one. Never apply for a board seat. 99% of board seats are false advertising by recruiters who are just trying to get your CV. And the other thing I'd say for entrepreneurs is, one, absolutely create your own advisory board. But two, find a company to sit on their advisory board.
To experience how they are managing everything so that you can try to replicate it in your own firm.
Yeah, exactly. So go and find, like, you've got other mates that have got stuff. Just say, hey, look, let's just do a swap. You be on my advisory board. I'll be on your advisory board. We'll get 4 or 5 other people. We'll do this. you will learn. And look, every entrepreneur goes, I haven't got time. Like I'm already doing 24/7. Like I can't think about somebody else's business. You will learn so much. What you will see is that company has solved things that you've been struggling with for 6 months, and you'll fix things that they have no idea how to do. So you can add massive value. You can learn a lot. You can make connections that will last you a lifetime. I still get deals coming to me from people that I sat on the board with 10, 15 years ago. Those relationships are super, super valuable.
I'm definitely going to invite you to be an advisor to my board for sure. That's a very cool concept. So coming, including and going towards the end of this session, it has been brilliant. It has been enlightening, the details that you've shared. So you've seen success in your life. You have made companies, you've scaled them, you've seen millions of dollars valuations, and then you're selling, exiting from those companies and now advising the boards and the company. So for you, how do you define success? And what would be the message that you would like to give to the people who are just thinking that making that 10 million, 1 billion would solve all the problems for them?
Yeah. Look, the problem is it's different for everybody. I love what I do. And even when there's lots of struggles on the entrepreneurial journey. And there's lots of times I thought, this is so hard. I would just love to go back to corporate and have an expense account, and a regular paycheck would just be glorious. But when I thought about the loss of autonomy, giving that up to go back into that environment, I just couldn't do it. And so I think Jerry Seinfeld had a great line about find the torture you're comfortable with. So getting up on stage and trying to make people laugh is torture, but he's comfortable in that space. And I think for entrepreneurs, you need to kind of be comfortable knowing that you're just going to go through these extremes of emotion. One day is going to be the worst day in the world. The next day, a client phones you up, you're like, it's the best thing ever. And so you kind of need to get comfortable with that. And I think, look, everybody has their own sort of definitions of success. I think for me, learning, it's more about the journey than the destination. And I remember people telling me that when I was 20, and I was like, don't believe that at all. Like, it's all about the destination. So, like, I want the jet, I want the yacht, all of that sort of stuff. But it's actually the journey and the people you make around. For me, for other people, it'd be different things. I think everyone needs to find their own definition.
Yeah, and of course, there has to be a cost of it. So thank you all for listening to us, and thank you, Callum, for your amazing insights. It was a pleasure having you today. So we'll add the details about the book, Boardroom Blueprint. If anyone who wants to give it a read, you guys can check out for digital copies and then reach out to Callum. He's based in Singapore. We're in Singapore now, so let's see what the city brings to us. But yeah, see you next time. Thank you so much.